So it is Friday, 3 days after the election. The market is rocking and rolling, and we have no idea who our next president's going to be. This is Wealth Talk. It's Friday. Rob Luna here to break down what's going on with the market, what's going on in the election, what are we looking at. Well, so what everyone's asking me is, why is this market rallying? We're up about 7.5%, 8% on the S&P. A lot of the stocks that were some of the winners this year, the big name tech stocks like Amazon, Facebook, we saw absolutely getting demolished as money was pulled out of those about a week ago. Those have been back to being some of the big leaders this week. So let's kind of break down what the market was expecting, what the market might have been worried about, what was best case scenario, worst case scenario, what we're in the middle of right now, and importantly, where do we go from here? What do we see going on right now? Well, I think let's talk about what the worst case scenario is in our perspective for the market. I talked about this with my friend Charles Payne on Fox Business just a couple of weeks ago. We were talking about, I think what he was saying at the time, well, the market's worried that President Trump's not going to get elected. And I said, well, I think what the market is more concerned about, because the talk's been for the last month and a half, not necessarily the presidency. Number one, I told him I think it's very concerned about stimulus, because stimulus is what's really kept us afloat to this point. But also what I think it was a concern about was this blue sweep, meaning that the Democrats would have taken over the Senate, which has been held majority by the Republicans of now. There was never really any doubt that the Democrats were going to be able to take the House, keep the House, but they were worried about taking over the Senate. And so this isn't about getting political. It's really just talking about what does that mean to the economy, economics, from a handicapping perspective, risk management perspective, where do I want my assets flowed perspective. What does that mean? Well, why they were worried is obviously there's been an aggressive agenda in terms of taxation, potentially regulation with Biden coming in. He already said that he's going to, at minimum, take corporate taxes from 21% up to 28%. Well, first of all, the market obviously doesn't like that because earnings are essentially after tax. So the higher the tax deduction, the higher the tax line is that has to come from that, the lower the earnings. Stocks are usually based on a multiple of earnings. So if we had higher taxes, obviously, that's not good for the economy. Same thing with regulation. Regulation is seen as an additional tax because if there's new regulations, you have to hire new attorneys, new compliance officers. That is a cost that is not beneficial to the investor. It's not like M&A, strategic growth. It's just a cost center. So investors don't like additional regulation. So just like Trump, if you remember his first 2 years in office, when he came in, he was able to pass a very, very aggressive tax reduction. How did he do that? Well, at that time, the Republicans had both the House and the Senate. So when it went to vote, it was easy to pass his agenda. That changed after 2 years. So you can see after 2 years, he didn't get much more done. So now what's happening? The agenda that Biden is talking about is going to be very difficult to pass for two reasons. Number one, the economy obviously is not on fire by any mean. We're starting to see a resurgence in COVID. So there's going to be some challenges, more than likely, at least through the next quarter, potentially 2 quarters of 2021. Secondarily, though, there's not going to be the votes to support it since the Republicans were able to keep the Senate. So the way the market's looking at it, there's not going to really be any new regulation, no higher taxes. That was something that they were extremely worried about. You can tell because the names that were sold, the Apples, Amazons, Googles, people were saying, well, why were they sold and why were they going up? Well, think about it. If capital gains tax, which is something else that he spoke about, were going to go up, you'd rather sell this year and pay 15% than pay 20 or 25% next year. So they were selling those winners in anticipation that Biden would be the new president, in the anticipation that potentially a very high likelihood that the Democrats could have taken over the Senate as well as the House and passed that tax code. When it started to become clear that that was not going to be the case, even though it really appears most likely Biden is going to be our next president, the bigger issue for the market is that it looks like definitely the Republicans will be keeping the Senate. So now they started buying back some of those names because at least for the next 2 years, they're not going to really be worried about those. What does this also mean? Well, it also means, which is kind of another actually good benefit for the market, is that because of the fact that the Democrats have been vocally looking for a larger stimulus for the economy than the Republicans, more than likely that stimulus will not be so large. So, what does that mean? Well, it means essentially that the Fed is going to have to continue to use monetary policy in absence of fiscal policy to keep, a ground floor under this market. So if that happens, that means interest rates stay low. We've talked about for a long time with this that the 10-year bond really controls all risk assets. So the lower that yield is, the higher the appetite for risk. So people are continuing to buy stocks, dividend paying stocks, growth stocks. So what this really all means from our perspective and what I've been saying for 2 months, I mean, it's been clear. Like if you were thinking that the market didn't have any idea that Biden could win, I mean, that's ridiculous because actually the polls, which we're now seeing weren't extremely accurate, we're saying for quite a while that he was way ahead. So the market was pricing that in, but the biggest worry in terms of the market was this blue sweep where the Democrats would have taken over the Senate as well as maintained the House. Now that that didn't happen, it's kind of an all clear, at least for the next couple of years. So if you've got low interest rates, if taxes aren't going to be going up, if new additional regulation is probably not going to be an issue, really the backdrop for equities still looks extremely positive. We're extremely bullish. Money has to flow somewhere. Do you want to put your money, we talked about, in 10-year bonds paying less than 1% when you can get great blue chip companies paying 2.5%, 3.5%, 4%, 5% dividend yields with some capital appreciation? We all know that technology is really changing the way that we do business. So some of these technology stocks, I believe, will continue to lead the way. Also, we own a name like Alibaba in our portfolios. I think now Trump has been a big adversary, obviously, of China. So you're starting to see some of these Chinese stocks catch a bit out there as well. Those people who are worried about the dollar, so dollar denominated assets, people were concerned about that. Not so much anymore, because if we're not going to have this massive stimulus, if we're going to be able to have some regulation in terms of the Republicans holding on to the Senate, more than likely we're not going to continue to flood the economy with more stimulus and more stimulus and more stimulus, which would drive down the dollar. So just as we've been saying for the last few weeks, we weren't jockeying for position ahead of clarity. We're getting to a point of clarity, even though we don't know exactly who it is yet. We know worst case scenario. I think it's December 8th, even if there is a contested election, which is obviously very possible. We have to have an outcome. So within 2 to 3 weeks, this is all going to be figured out, potentially sooner. But like I said, the biggest variable that we were all worried about, where any agenda, in this case, the Democratic Biden's agenda being able to get pushed, would have been a concern. Again, not a political statement, but that's what the market was looking at, those two facets. And that's why we're explaining why the market's rallying, why we're seeing certain positions do better than others. And I think over the next 2-3 weeks, we're really going to get a lot more clarity on this. But so while there's a lot of uncertainty out there, and I don't want to say we weren't expecting this. I think we all kind of knew that this was a very high probability that we'd get into this type of election. I think the market's holding up extremely well, having one of the best weeks of the year. It has me very, very optimistic of going into next year, looking at equities continuing to maintain. And just like we've been saying for the last year, I think it's the type of market where you want to pick the winners. I don't think it's an indexing type of market. You want to be in the type of names that are really going to benefit from this. We have a good idea. We've been spending a lot of time, which is why I'm actually working from my house today, up late at night, watching this, reading every line that comes out, trying to get our arms around who are going to be the winners. And I think with the next week, we'll be formulating that plan. So thank you so much for all of you. We appreciate your business. We think this is, again, going to be a great market, great outcome. Stay tuned.